Thank you so much for the kind introduction. Thank you everyone for being here. Welcome to our session on crossing the Atlantic to financial freedom. I know Freedom Fest has a lot of awesome talks and activities, so we really appreciate you choosing to be with us for the next 50 minutes. Let me just get the clicker. Our idea and our goal for today's session is to share as much knowledge and experience that we have on Swiss banking and offshore banking with you. As mentioned by the kind volunteer, we will have a Q&A session at the end. Before that, however, I'll be talking about offshore banking. What does it mean? Why Switzerland? Why Switzerland a good or a suitable jurisdiction? What are the benefits and the challenges? I'll be talking about what it means to be working with an independent asset manager versus working with a private bank. And then lastly, I'll be talking about what it means to be working with WHVP, our company. And then I'll be handing over to Urs, who will be covering our economic outlook and how we structure our portfolios in Switzerland. And then lastly, as already mentioned, we will end with a Q&A session. Now, before I get into the presentation, just a few words about Urs and myself. Urs and I, we are not just partners in business, we are also partners in life. We have been together for almost a decade now, and shortly after getting married, we have started working for my father, Robert, that you see on the top in the middle. He has founded WHVP in 1991, so we have been servicing US clients for over 30 years. We are Swiss-based, we are registered with the Securities and Exchange Commission in the US, and Urs and I divide the labor in the sense that he's responsible for the investments, for the portfolio management, and I do a lot of the business development, storytelling, marketing. When we're not working, we both love spending some time in the Swiss Alps. You see, Urs prefers the winter times when he goes snowboarding. I prefer summertime for hiking and trail running. And then, of course, our family wouldn't be complete without our French bulldog, Henry, that also comes to the office with us. Now that you have learned a little bit about Urs and myself, I'd be very curious to hear a little bit about you. So what are your thoughts on offshore banking? What associations do you have? Do you have positive, negative ones? Feel free to share whatever you want to share anonymously. You can share up to 3 things that come to mind. And then we're going to switch slides. I'll give you a minute to just scan the QR code for everyone who wants to participate. And then we will see what the room thinks on offshore banking so far. Wonderful, we already have the first contributions. Thank you so much. That was very quick. I'm just gonna start commenting on a few of those that we're not gonna lose too much time. So I love tax evasion and criminal because that's something that comes up almost every single time that we speak about it. Hiding assets goes into the same basket. Of course, I'm here to tell you that this is a misconception. It is not true. It's something that has been perpetrated by the media based on the tax scandals that happened over a decade ago. A lot has changed since then, and Switzerland very much is a compliant country. We have very close relationships with the US, and moving money offshore is neither illegal, nor is it criminal, nor is it for tax evasion. There's a lot of benefits that come with offshore banking, but those are not one of those. I'm gonna talk more about that. I like that we also have some positives here, so maximizing wealth, we're certainly also gonna talk about that. Secret, yes. Privacy is certainly also something that we're gonna cover. Access, yeah, I'm not sure what that's referring to, but you certainly have access to different markets. Protection, also a great one, thank you for that. We're also gonna talk about that later on. So I see there's already quite a bit of thought going on. I appreciate everyone who participated, thank you so much. I think due to time restraints, we probably have to move on back to the slides, but I want to talk about the benefits that come with offshore banking. And again, it is, thank you so much, Urs. It has nothing to do with hiding anything from the IRS, but there's plenty of other good reasons why people want to be moving money offshore. So the first one that I want to talk about is the US dollar depreciation. So the chart that we see here is the purchasing power of the US dollar since its inception, and you can see that starting from 1635, There has been an uptick, but after that it was mostly downhill, especially if you look the past 80 or so years. It really has just been losing value every single year without any significant upticks. And this is very important because if you hold all of your assets in a portfolio that is well diversified, that is in different asset classes, that is in different stocks, but they are all denominated in US dollars, you might not be realizing how much value you're still losing. So one benefit of moving money offshore, so that just means moving money outside of your home country, outside of the US, for example, into a country like Switzerland, will enable you to put your portfolio into a variety of different foreign currencies. So it gives you another option to diversify your wealth by going into other currencies that appreciate in value and that appreciate in value against the US dollar. It doesn't necessarily mean that you have to go out of the US dollar completely, because you're probably getting pension funds, you're getting retirement money, you're getting an income in US dollars, probably going to have outgoing payments in US dollars. So it certainly makes sense to keep part of your wealth in the US dollar, but it also makes sense to think a little bit wider than just your domestic currency. Speaking of diversification, another very important point on that is stock market. What we here see is the US exchange market capitalization. So the US stock market is one of the most important ones in the world. We see here on the left side in 1970, the US stock market made up about 72% of all stock markets worldwide. Here we also see that it has been going down, so we're currently at about 45%, which is still hugely significant and important, but it still shows that we have over 50% left that we're not going to use if we're going to stay completely into the US stock market. And yes, it's possible to also invest in foreign stocks if you're holding your portfolio in the US, but it's very hard to find someone that is actually specialized in the local stock markets and the local investments, especially if it's mid and small cap investments. And what we see is that a lot of US portfolios, if they have some sort of diversification in international and geographical aspects, then it's oftentimes through ADRs that are then traded in US dollars again, or it is through ETF where we don't have any individual stock picking. So again, another point for diversification, this time in terms of stock investments. Because if you're working with someone that's based in Central Europe, if you're working with someone that's based in Switzerland, they're going to have a different worldview, they're going to have different access to information, they're going to have different access to investment opportunities that are local to where they're at compared to your domestic financial advisor here in the States. Now, the third reason why people move money outside of the US is cyber attacks and privacy protection. So those are just a few headlines that I gathered last week when I was preparing for this presentation. They're all from 2023. They all happened over the past few months. And what we know is the US is one of the most breached countries in the world. Identity theft is a huge problem here. We see that government data is being breached. We see that financial information is being breached. And while Swiss or offshore bank accounts are not for evading taxes, they're certainly increasing your level of privacy and security, because other than the IRS, no one's going to be informed about the money that you hold offshore. You will be less visible, and your money will be in an institution that is much less targeted by criminals and cyber terrorists. Talking about less visibility, that brings us to the last reason why people move money offshore. It's kind of a funny slide because it has a humorous aspect to it, but it is a very real problem that in the US we have the highest number of frivolous lawsuits worldwide. So the US is an extremely litigious country, and if you have a certain level of wealth and success, it is very likely that you're going to be sued sooner or later. That might be for valid reasons, or it might be for invalid reasons. And one way of protecting yourself is, again, by having less visibility from your wealth, by having money in a country that is more privacy oriented, like Switzerland. But it can also be, a Swiss bank account can also be used as a part of an offshore as a protection structure. So for example, you can set up a trust in a offshore jurisdiction and then have that money managed in Switzerland, which will certainly increase your asset protection by quite a bit. Now that we have spoken about reasons why people move money outside of the US, I want to talk a little bit about Switzerland. As you know, Urs and I flew in here from Zurich, from Switzerland, so we might be a little bit biased, but there's also a lot of data that speaks towards Switzerland as a country for financial services. So Switzerland has the longest track record when it comes to private wealth management, and there's a lot of good reasons why that's the case. Switzerland has been militarily neutral and still is militarily neutral. We have avoided both world wars. It has been several hundred years since our last armed conflict that we were involved in. We also do not belong to any power bloc. So we're not part of the European Union, we're not part of NATO, we're not part of any other large military organization. And that makes Switzerland a country that is very well known and very popular to mediate between different countries. Switzerland has also done some mediation between the US and countries that they have been at conflict with. Next to militarily neutrality, Switzerland also has a very strong track record when it comes to economic stability. We have banking that goes back several hundred years. So during the Middle Ages, Switzerland started managing the wealth of wealthy royals, wealthy royal families. That means you're not going to find any other country that has as much experience and as long of a track record as Switzerland. And then, as I've already mentioned before, Switzerland really strongly believes in privacy, and that's something that also dates back several hundred years. But of course, that's all not so relevant for you. What's relevant for you is what Switzerland is today and why it still is one of the most popular hubs for private wealth management. What we see here is Switzerland, the assets under management in terms of GDP. So Switzerland is a small country. We only have a population of about 8 million people, but still, if you look at it in comparison to our economic output, Switzerland has assets 5 times as big as our GDP. The second place here is the UK, that has less than 4 times the size of the GDP. So we're really leading the pack here. You also see the US that has a very sizable financial industry, but it is on the 10th place, which is a little bit over 1 time the GDP of the country. Currently, with 8 million in population, we have over 240 banks that are still open and running in Switzerland. Most of them have a focus on private wealth management, so compared to the business model in the US, that is a bit more focused on more aggressive strategies, more investment banking. We really do a lot of conservative private wealth management. And what's very interesting is we don't just do that for Swiss people, but we currently manage 25% of all global cross-border wealth in the world, which again is very significant for a country that you can drive through in 4 hours. Again, Switzerland is a country that is very popular during times of crisis, and one reason that is because of the Swiss franc, that is a very popular safe haven currency. That's also something that we saw during the COVID pandemic. People flocked into Switzerland, they flocked into our financial system and into our currency because they know that we are reliable during times of distress. We also have a very exceptional education system, so a lot of people start working in large banks at the age of 15 or 16, so they work there 3 days a week while getting their high school diploma. So you really have a service mindset where people learn how to treat their customers well at a very young age. Then we also pride ourselves in our service level, so we pride ourselves in our professionalism, integrity, and of course we also have very strict federal laws. We have a very large focus on customer protection, and we're a wealthy nation with a very low debt to GDP ratio. It's currently about 42-44%, which is fairly low, especially if we compare it to the US. We will hear a little bit more about that later on today from Urs as well. Now I'd like to talk a little bit about what it means to be working with an independent asset manager, because everything that I've shared about Switzerland and private banks is probably somewhat familiar to you, but if you're an American, you cannot just walk into a Swiss bank and tell them you want to open up a bank account. Those times have been long gone, and it's important to work with the right partners because cross-border issues, especially since the tax scandal over a decade ago, have become quite complex. So one way to work with Swiss banks is through an independent asset manager that would be a Swiss-based registered investment advisor. In Switzerland, we have about 1,700 independent asset managers. Typically, those are boutique firms with less than 10 employees. About 40 to 50 of those have a license with the SEC and are thus allowed and compliant with US rules and regulations to onboard US clients as well. I'll be talking a little bit more about the benefits of independent asset managers on the next slide, but just here for your understanding, you as a client, you have a contractual relationship with the asset manager who's responsible for compliance, administration, communication with you, and also the investment strategy, but you also have a contractual relationship with the custodian bank, which will be the institution that holds your asset. And then of course, the asset manager also has a contractual relationship with the custodian bank because they do need limited power of attorney to be working on your behalf with the bank. So besides the requirement of the SEC license for US Americans to be working with Swiss companies, we also like it to call it the best of both world approach, because you get access to the most safe and secure private banks in Switzerland that are larger establishments, that are larger financial institutions, while at the same time being working with a small boutique firm that in our case has been family owned and run for over 3 decades. That way you have direct access to the owners, you have entrepreneurial mindsets, you have solution-oriented teams, and you have people that are there for the long run. I will be talking about our colleagues shortly after, but I think it's important to understand that with the larger banks, you don't always get independent advice. Oftentimes they are incentivized to sell their own in-house product. With independent asset managers, you really have a partner that only takes money from you, that doesn't have any conflict of interest or other financial incentives to put something into your portfolio that doesn't make sense for you. And then of course you also have the option, depending on how much money you want to bring offshore, to work with several custodian banks and have the same contact person at your one independent asset manager. If you're unhappy with the bank, you can keep your contact with the boutique firm and still switch the custodian bank. And then of course the asset manager can also negotiate smaller minimum investments and fees, because they can negotiate with the bulk of clients that they have and not just with the one portfolio. A little bit about the process. I don't want to spend too much time on this. If you're interested in learning more, then feel free to reach out to me, or as we're going to be here the whole conference, but just for you to get a bit of an understanding of what is part of the process of setting up an offshore bank account. Because everything is legal and compliant, there is a little bit of information needed up front, so we call that KYC, know your customer information. So you will have to provide a copy of a valid and signed passport, a little bit of background on your financial situation, on your family situation. Of course, that will all be discussed thoroughly in the first consultation. So we'll go through the paperwork that is needed in the first conversation, but of course, before we come to the paperwork, it's very important that you feel comfortable working with the asset manager and the asset manager feels comfortable working with you, because it is a trust business and it oftentimes is a relationship that will be standing for years and decades, sometimes generations to come. So it's very important that both sides feel comfortable with each other and that both sides do their proper due diligence. Once the first KYC information has been provided, the case will be presented at the custodian bank. Which custodian bank is best for you would also be determined together with the asset manager. From our side, we have very high standards in terms of the banks that we work together with. So we like companies that are also family owned and run. We like companies that are risk averse, that have a long track record, that also have a very sustainable strategy in how they want to grow over the next years. Of course, we only work with banks that have a good understanding of the US market, that understand US clients, that speak English, that understand how US tax statements are being prepared, etc. Nevertheless, we have several banks to choose from, so the final decision will be in your hands, which bank best suits your needs, your personal preference, and where you feel most comfortable. Once you have been accepted by the bank, they will issue the account opening set, and our team is going to walk you through the whole process of how everything has to be completed, where to sign, what to provide, and then once that is all done, the bank is going to open up the bank account. The whole process on average takes between 4 and 6 weeks, depending on how complex it is, depending on how fast you are in returning emails, etc. But it's important to note that it can be done remotely, so there's no need for you to travel to Switzerland. It can all be done through video calls, phone calls, and emails. Now, as promised, here is the rest of our team. I think it's important to note that Urs and I are not running the show by ourselves. We have on the left side Daniel Kohler, our compliance officer, who makes sure that everything we do is legal and compliant, not just with the US rules and regulations, but also with the Swiss ones, because being based in Zurich, we are of course also licensed in Switzerland by the Financial Market Authority there. Second person from last is Jess Roberson. He's our American colleague. He moved to Switzerland a few years ago because he married a Swiss woman. He is responsible for our administration, back office, so he does a lot of the account openings, he does a lot of wire transfers, things like that. He's also a huge help when it comes to communication and social media. In the middle, we have Julia Fernandez, who has been with our firm for over 20 years. She has her own client base and is extremely knowledgeable when it comes to all the rules and regulations and specificities that come with working with Americans. And then Urs and myself, I don't have to say much more about us. I think you already got a good understanding of who we are. Now here again, I don't want to spend too much time on it. We have 3 different service levels. The minimum investment volume with our firm is $250,000 US. Depending what you're looking for, we have different options here. We have different banks that we can provide, different strategies that we can provide. Again, if you're interested in learning more about that, feel free to reach out to us either online through our website or come by our booth later today or the rest of the conference. What's very important to highlight here is that we don't just help you move personal accounts offshore, we can also move self-directed individual retirement accounts offshore while keeping them tax compliant and tax deferred, and we can also open up accounts for, again, offshore domestic trusts, LLCs, and of course, we can also open up joint account if you want to open up a bank account with a spouse or family member. And I think, yep, that has been it from my side. I'm happy to hand over to Urs.
Thank you. So now you heard quite a bit why it does make sense to open a Swiss bank account and what is the background, what is the process. But what you have not heard about so far is what do you actually get out of it. And so I brought with me a sample portfolio today, so that you see what is included in such a portfolio which we manage. So we have foreign currencies, we have equities, we have bonds, and we have precious metals. And now, very, very important to understand, what we do is we help you to diversify. So you don't need us to come back and invest in the US. So we exclude the US. You have your banks, you have your asset managers here, so you don't need a Swiss structure. I mean, obviously we can do that, but it's not what we usually do. So what I'm talking about when mentioning foreign currencies, that's what we all love: Swiss francs, for example, Australian dollar, Japanese yen, British pound. So we get access to these different currencies. We open accounts in these currencies, and once we are in these currencies, we look in that region and evaluate investment opportunities. So these are equities and bonds where we see, okay, let's say we get a great company in Switzerland. Everyone heard about Nestle, so we can invest in Nestle, collect the dividends, have the exposure to Swiss francs, and so on. And then also in the bond area, what is also very interesting is, for example, Australia, you don't have any withholding taxes. So you invest in a bond that is issued in Australia, you have the appreciation of the currency, you have interests that are paid on a regular basis, so you have that part covered as well. And then last but not least, who doesn't love it, especially in Switzerland? Precious metals, gold in particular, but also silver as an industrial metal, but also like a valuable metal, or platinum. So that's also some area we cover. Now the question is, what do we focus on, or how do we evaluate which region is worth to invest in? And obviously we're not have that much time, so I will reduce it to Switzerland, where we are from, and the US, where you are from. So one part is, for example, inflation. Just yesterday, the most current inflation numbers came out. US is back to 3% from 4% headline inflation. Core inflation still 4.8%, so it's more secure. In Switzerland, question is here, which I brought with me. What do you think? In the last 23 years, what was the highest inflation we experienced in Switzerland? Who thinks it's above 5%? Who thinks it's somewhere between 3 and 5%? Who thinks it was below 3%? Okay, we were not that good, but almost. It was 3.5%. It was in August last year. The latest inflation numbers from June this year were 1.7% for headline inflation and 1.9% for core inflation. So we are the first country in the Western Hemisphere who is back below 2%. So here you see it for the last 2 years. So how you see that the volatility in inflation is much lower than it was in the US. And this is also something we see at the markets. Oftentimes when markets are up in the US, they are up a lot. We are not up that much. But if markets are down, we're also not down that much. So you got this kind of stability when you invest in Switzerland. Another part or another focus which we have is debt. We don't really like debt. Sometimes you need debt, but the question is it sustainable? In Switzerland, Jamie told it, we have debt to GDP ratio of about 40%. What does it mean? If you have 40 trillion of debt and 100 trillion of GDP, then you have 40% debt to GDP. If you look back to the 1990s, you see that the debt to GDP ratio accelerated in Switzerland as well. But what happened then was the politicians themselves said, that's unsustainable, we need a solution. So they introduced a debt brake, which was accepted by the people of Switzerland in 2003, and which actually works. I mean, many governments have a debt brake, but we really adhere to it. So it dramatically came down to about 40%, stayed there. You have this uptick in Corona times, but other than that, it's really, if the debt grows in relation to GDP, politicians have to come up with a solution how to reduce spending. In the US, I think everyone in this room is aware of that. That's how it looks here. So from the 90s, it was already above 50%, growing to 65%, coming down again until 2002. And then especially from the great financial crisis, it started to accelerate. And now it came back a little bit again. But the question here really is, how will it move forward? And we do have this like Inflation Reduction Act and infrastructure spending. I mean, if you're following like the government's own financial department, you will see that the expectations are that spending will further grow rather than coming back again. So, I want to come back very briefly to a very important point Jamie was already making at the beginning with the first graph. He saw like the purchasing power of the US dollar, how it decreased over time. And I have an example, a very simple one. If you would have taken 1,000 US dollar back in 2000 and changed it into Swiss francs, and today you would take this amount which you got back then and change it back into US dollar, you would get 1,770 US dollar. That's a 77% appreciation of the Swiss franc. It's very interesting to understand that during these 23 years, the accumulated inflation in the US was about 75%. So you have to understand that by only moving your money into Swiss franc back then and now moving it back to the US dollar, you would have outperformed inflation. I mean, it's a theoretical example, but I think you get what I'm trying to explain here. So, Last but not least, I want to give you a little bit of an outlook. So what do we expect from the markets? I mean, we want to sell you investments through Switzerland around the world. So what is our perspective currently? Are we still in a bear market? How does the economy look like? The first half of this year was crazy. I mean, I think everyone agrees with me on that. I mean, the Nasdaq 100 was up, 36%. S&P 500 was up 16%. But if you look a little bit more into detail, you see that a handful of companies like Google, Facebook, Amazon, and so on were the companies that pulled the index up. And that's the case a little bit around the world. So the sentiment in our perspective is too positive. And so we expect that in the second half of the year that things will become much more challenging, much more volatile, which in the short term, I will argue, will lead to an appreciation of the US dollar. And this will be an opportunity, especially for investors, American-based investors that are not yet diversified of the US dollar, to take this opportunity, take a bunch of money and move it into other currencies, look out for investments. And then, I mean, eventually everyone has to accept that we will end up in a recession, but as we know from the past as well, once we are in a recession, like the long-term forecast will be more positive again. So take this next 6 to 8 months to position yourself in a smart way so that you can benefit in the long term. And now one very last thing I want to mention before we move to the Q&A session, we are very well in time, is we have, what is it called? Sorry? A raffle, sorry, I forgot the word. We have a raffle where you can win 5 silver coins. We have it with us, so if you leave your email address with us, we will draw one name on Friday night and we'll reach out to you by email on Saturday in the morning. So make sure, if you participate, make sure to check your emails on Saturday morning so to collect your silver coins, because we cannot ship them from Switzerland. So that was it from my side. I hope you learned a little bit. I hope you enjoyed the presentation, and we are very open to answer any questions you have.
Yes, oh, we already have the first question. Please go ahead.
Kind of two, actually. So, what are the reporting requirements to the IRS if you have or any account, qualified or non-qualified? And also, what kind of returns can we expect from an income-generating account?
Okay, I'll take the first question and then hand over to Urs for the second one. For the reporting requirements, it's extremely important to get them right. We would not recommend moving your money offshore and not be working within CPA that understands international bank accounts. We are not tax experts, so we don't do the reporting for our clients, but we have a lot of good CPAs that we can refer you to that help you to file the taxes or file the accounts properly. What we do provide is a tax statement at the end of the year where you get all the information that you need to file your documents properly. So you'll get one document that summarizes all the information that you need to file your US taxes, obviously in English, obviously in US dollars. So you have the highest value of the account, you have the income, like the capital gains, losses, all of that, but we don't provide that ourselves, so we would recommend that you work with a CPA that understands international banking.
About performance, that's always a tough one. I mean, obviously we can't promise anything, and it becomes much more complex when you include currencies. So the first thing I have to mention here is that you really have to have a time horizon, I say usually of at least 5 years. From an income perspective, I would say what the past tells us is that over the last five years, I would argue, we had a return of about 6% after fees. But if you, for example, started in 2021 when the US dollar was very weak, and then we moved it out, then obviously it doesn't hold up. So it really has to be over a certain period of time, and I mean, sometimes you also get a little bit lucky or unlucky.
I think important to add here is as well that we have mostly individualized portfolios, so it's hard to give out standardized portfolios because we have people who have, again, shorter time horizons, longer, more risk averse, more willing to take risk. I think the 6% net of fees that you mentioned is for a moderate approach to risk. We have one standardized portfolio where we can give out past performance, but for all other portfolios, it really depends a bit on your situation. But if you come to us later, you tell us a bit more about what you're looking for, we can give you a bit more specific answer. Yes, please.
So we have a lot of break-ins to our system on internet because that's where the money is. Why is your system different money now?
That's a good question. I anticipated this one. There's a couple of points that play into this. So one, I think Switzerland is less of a target because it's a smaller country. It is there's a lot less data to be gotten out of there, and we are going to be more of a target going down the road. But we now have time to invest a lot of money into cybersecurity. So there's a ton of money being invested into having more secure systems, and we also see that from like an authentication way, from an identification point of view, from like a passport point of view, that the Swiss banks employ much more safer 2- and 3-way authentication than what we see with domestic banks in the US.
Maybe one thing I have to add, as you might have heard a little bit out of it, like Switzerland is not the most exciting country, so Swiss banks don't have to be like at the forefront of everything. So they usually take a little bit more time until they adapt, so if there is a new technique coming up, so they don't have to be the first one, and with being on the forefront, expose themselves to certain cyber risks, and so they take their time. We even have one bank which doesn't even have a online banking yet, and I mean, that's on one side it's a little bit okay, we are in 2023, but on the other side there is less risk involved. So it's always like you have to weigh what is more important. Do you want like the privacy, like less risk, or do you want to have quick access? The same is the case with like if you have to withdraw money, how fast does it go? Especially these days with artificial intelligence, there's so much possible. So there are certain steps involved in withdrawing money, which makes it more difficult for you as a client, but also more safer for you.
There's a trend toward digital currency. Are you involved with that at all?
It's something that we watch very closely, especially a few years ago when we saw this boom. It was a question we got quite a lot. It has now died down a little bit in terms of inquiries that we get. It's something that we're open to. I think it's something that's not going to go away, at least that's my personal opinion. We have looked at various banks that offer digital currencies. So far, none of them have really been open for American investors. As soon as that's going to be a possibility, we are going to be an adapter, I guess. But as of today, as of right now, we don't really actively offer anything, but I do think we have a custodian bank that can accept cryptocurrencies if you want to bring them, but we don't involve or have cryptocurrencies in our allocation at the moment.
Yeah, I think like also what you see in the cryptocurrency markets or digital currencies markets, there is so much volatility and so much expertise you need. So it's not really something we proactively offer. So we are not going to trade for you like Ether or Bitcoin or any altcoins. If you have them and want to bring them, we can give you like cold storage, a safe environment to store them, but we're not going to trade for you.
Is the Swiss Central Bank thinking about creating a CBDC?
It is not. We actually have a podcast called Swiss Money Secrets. You can download that anywhere you'd like, and I think the second last one that we did was on that topic. And the Swiss National Bank is also very conservative on the topic. I mean, you never know what the future holds, but the stand of today is that they don't see the need for a digital currency and that they don't want to have one. Yes?
So we might have one here in the United States. So I'm curious, if I had a Swiss bank account, if I could write a check in Swiss franc to another American in America and clear that
Well,
check?
So we don't really work with checks anymore. So checks are not really a used currency in Europe, so that's going to be very difficult.
What about a giro?
We would have to look into that specifically. It's very hard to speculate on the future, what will happen when the US, if and when the US introduces a digital currency. What I can tell you is that in Switzerland, cash is valued very highly. 97% of people still use cash in some capacity, and there's even a cash initiative that was started this year by some people. What we need in Switzerland for a referendum, so for a change of our constitution, is 100,000 signatures in, I believe, 3 months. If you have that, there will be a national vote on a topic, and they have gathered those signatures to write in the constitution that the Swiss National Bank will always have to provide the option to pay in cash to ensure also privacy and security. But again, speculating on what might happen if the US introduces a currency like that is very hard to do, and I think it wouldn't really be the right thing for me to now just guess.
Well, I'm just looking for options for people in America to make payments outside of any system that might be created by the Fed and or the US Treasury.
I mean, you can make payments from your Swiss bank account to another foreign bank account. That shouldn't be a problem. If it goes back to the US, then I don't know what the US has planned. We will have to adhere to rules and regulations that the US put out. But if it's from your offshore bank account to someone else's bank account, it shouldn't really be affected by what the government does.
Thank you.
Any other questions?
What, if any, impact do you think the Swiss currency and Swiss banking system would feel from the BRICS conference in Johannesburg this month?
I think that due to our special status as a very neutral country who is not part of NATO or EU or so on, I think that there will be more demand for the Swiss franc. I think that the Swiss franc is valued very highly, especially due to this circumstance or this fact that we are that neutral. So it will be very difficult to see whether it will directly have a positive impact, but on a longer term, I surely think that it will have a positive impact, because also the desire of the BRICS countries to move away from the US dollar. I mean, there are just so many alternatives. And if you want to be on a safe place and not a safe haven currency, Swiss franc definitely a good option. Yes.
I have a question. Do you think that the Swiss franc that it will be pegged to another currency again?
Whether the Swiss will peg to another currency? We had that in the past. We had the Swiss franc being pegged to the euro, because euro didn't work out as well, and the Swiss franc worked out better. I don't think that it will be the first measurement of the Swiss National Bank. They don't really like to do that. They like to have flexibility. So that was also what happened back in 2015. I don't know whether any one of you remembered what happened in January 2015. So until January 2015, 1 euro was 1 Swiss franc and 20 open, which is cents. And then from one day to the other, the Swiss National Bank said, we're going to cut that. And that led to quite some chaos at the market, but it turned out to be the right decision. And these days, I mean, until last year, the Swiss National Bank had to devalue the Swiss franc, and this year they figured, and that's also one reason why we have that little inflation, that we have such a strong currency. So this year, the Swiss National Bank sold foreign currencies worth about 200 billion Swiss francs already. And that's one of the reasons why the Swiss franc is also that strong, and also the reason why we have such a low inflation, because if we import services or goods which are more expensive but our currency is stronger, this will reduce the impact of the inflation.